the net loans to companies whose facilities have been restructured were 6336 crores compared to 7241. So looks like some 500 crores has slipped into NPL. And that is why, not 500, I think almost 1,000 crores, 900 crore has slipped into NPL from the restructured assets, but we don't have a slippages figure just yet. We have to wait for the company to tell us that. We have some guests. Meanwhile, maybe Abhishek, you want to go through the numbers more closely. Bajrang Bafna of Sunidhi Securities joins us. Prakash Dewan is also with us. And Siddharth. Well, Siddharth, your first thoughts, what have you made of the numbers? The GNPA in particular going up by 5,000 crores, that's all we have by way of bad loans.
See, GNPA certainly was expected to go up, but despite taking a higher provision, going up, and even net NPA also has gone up by close to 800 crores, what I just see.
Yes.
So that is something, need to really listen that, despite taking almost the entire, stake sale from Prudential as provisions, it seems, then also the net NPA has gone up.
Yeah, there is also an aging of NPLs, isn't it? So you must expect that net NPLs would rise even with the substantial provisioning, don't you think?
Yeah, it is possible, but probably we need to really listen how much slippage has come from that watch list, because the percentage of provisions from that account will depend on the really quality of, that asset they have.
Okay. Right. Advances have risen by only 5,000 crores compared to last quarter. In the last 90 days, they have given only 5,000 crore more loans. It was 4.49 lakh crore. It has become 4.54 lakh crore. So not a very aggressive set of lending either. The investment book has grown by another 4,000 crore. Yeah, go ahead, Siddharth.
Yes, in fact, if you just observe, then possibly even advances number seems to be little lower than what we had been expecting.
Yes.
The growth number seems to be pretty low. And other, in fact, details we need to see what are the
deposits have grown by 25,000 crore. But loans have grown only by 5,000 crore. So it has been very careful lending. Deposits have grown from 4.24 lakh crore to 4.49 lakh crore. But
quarter on quarter, deposits have grown by 5.9% as against loan growth of just 1%. So your credit to deposit ratio has declined from 106% to 101%. So this is obviously the fact that, stress loss formations are more. So therefore, the bank might not have been...
The percentage looks bigger because of that.
Yeah. So because loan growth has not been much in this quarter, so 6.88 percentage wise looks big, much on the higher side.
Point. Yeah, I think we have to make that caveat from 5.8 to 6.8. It looks like that, wow, 1 percentage point. It's not as bad as that because the book itself has shrunk or not grown enough, and that's why you're getting the exaggerated feeling. Otherwise, it's only a 5,000 crore rise in GNPAs. Now, that's all we have to work with. First thoughts, Prakash Dewan?
So I think that the worrisome part is going to be the trend that we've seen with two particular parameters. One is the net NPA doesn't seem to have peaked out. I mean, doesn't seem to have started softening. So there's a lot. It could probably be a quarter where we see the way Axis also reflected. There's a peaking out of all the bad loans and recognition. Second is the lack of credit growth is becoming a big concern because some of these larger corporate-facing banks are not finding the wherewithal to grow as much as some of the younger, smarter, personal loan kind of driven, growth, retail growth that's coming in from some of the private sector banks. So my sense is the valuation differential between an ICICI and some of the rapidly growing banks will continue to be there, and ICICI cannot probably justify this move that it has seen in the recent past. So, that's the big concern if the trend doesn't change favorably. The net interest income is absolutely flat, and that's, of course, for the reason why your GNPA number also looks optically as if it's kind of worsened. But that is going to be continues for too long. So we'll, of course, have to wait for the management commentary to decipher details, but that, according to me, these two are numbers that don't look very great at this point.
Bajrang Bafna of Sunidhi Securities is also with us. Prakash, Siddharth, do stay on. Bajrang, your first thoughts?
Lata, I think, we just need to see, because in case of Axis Bank, we have also seen there was a significant amount of slippages from the watch list. Almost 32% has slipped. So in case of ICICI Bank, the watch list is also pretty high, around 40,000 crores. So we just need to see, how much that has slipped and what is the status on that. Though in between we heard that SR, there was some sort of respite on that front. So we just need to see how that book has reacted. But barring that, if we see the numbers, though 5,000 crore is the GNPA, but NNPA just increased 1,000 crore. So they have utilized that cushion of around 5,000 crore which they have got from this Pru sale.
Let me just elaborate those numbers for you, Bajrang. Their non-interest income, counting the ICICI Pru sale, has risen to 9,100 crore compared to 3,000 crore. But if you compare like to like, without that 5,682 crore which came from the Pru sale, then the non-interest income has grown by 14%. So that would be something like probably 3,500 crores or thereabouts. Yes, go ahead. Maybe you only want to hear out what the provisioning details are, because that is what they have done. That entire 5,600 they have used to strengthen their balance sheet and provide more. The provisions, they are making additional provisions of 3,500 crore, like I told you. Provisions of 1,600 crore are for standard loans. The entire loss of 395 crore on sale of NPAs during the 6 months ended September 30th, which can be amortized, is not being amortized, it's getting recognized upfront, 395 crore on sale of assets to ARCs. Then there is a further floating provision of 1,515 crore which they have made. Other provisions were 3,495 crore. That compares with 2,515 crore in the first quarter and much less, of course, in the year ago quarter. The standalone profit, of course, was 3,102 crore. Anything further you can add, Bajrang?
So I think this floating provisions of around 1,500 crore, that is an additional. Last time also we have seen in the last stake sales, they have, set aside a certain amount of provisions as floating for future slippages. So this time also they have done the same. So though we have to see in slightly, bit detail, whether the entire amount has been utilized during this quarter or not. So that, that impact will not be visible in the net NPA side. So we just have to see in the nitty-gritty that how much they have utilized during the quarter and how much they have just set aside in the balance sheet for future uses. So that will be really helpful for future slippages. So that detail is also required to comment on that.
Bajrang, taking your point of contingent provision, as I had mentioned earlier, 2,735 crore. They have utilized about 680 crore in the current quarter as against 865 crore that they used in Q1. So if you do a back-ended calculation, it now shows that, they have a contingent provision of 2,055 crore at the end of Q2 FY17 as against 3,600 crore that they created in Q4 FY16.
No, but in this quarter, out of that 7,000, how much contingent provisions they have created? So that is also needs to be seen, na?
Okay.
That is the amount that has been mentioned, that 680 crore has been used out of this contingent bucket that they created in Q4. Q1 they utilized. No,
I think that point is taken. That point is taken. He is asking from the extra 5,600 crore which they have made. Okay. How much provisions have been made? Well, I read out to you the provisions that the press release has, Bajrang. That's all we have by way of information. From that 5,600, they have created additional provisions of 3,588. That's all we know. And of this, 1,600 is for standard loans. So the remaining 2,000 crores is what they have taken for bad loans. Of this 2,000 crores, 400 crores goes for ARC sale to ARC loss recognition. The remaining is, I think it's about 1,500 crore that they have provided. That's what they have already declared in the press release. Well, maybe if Siddharth has the press release in front of him and he can glean anything further. Siddharth Purohit?
In fact, unfortunately, I don't have much details as of now to add on to that.
Okay, but on the face of it, therefore, you don't want to make any comment on whether it's a good or a bad number, especially in terms of asset quality?
See, as far as asset quality, if you see, there has been a lot of provisioning adjustment which has happened, as you know. Some amount has been transferred from the earlier contingency provision, and again, provision has been taken from the one-off and which was expected to be.
Correct.
But now the question is that, you have already utilized part of the contingency provision you had on balance sheet, and then you have taken large part of the provision from the one-time income. So if the asset quality stays what we saw in case of Axis, that has was supposed to go up as per the management. If something similar happens over here, it will be very crucial to watch, because you have already utilized large part of the one-time benefit. So year onwards, then credit cost can go up. So that caveat should be kept in mind.
Okay, well, they've provided extra for standard loans. I mean, why would they want to do that when they have not even given any fresh loans? I don't know what is the accounting standard for that. They've increased their standard loan provisioning by almost 1500 crore. That's a bit surprising.
1700 crores.
1700 crores.
Standard asset. While your loan book has just
grown only by
11,
5,000 crores.
Yeah.
So, I mean, I don't understand that math. Siddharth, if you can help.
No, Lata, I need to really check out this number.
Yeah, we really need. All right. I think the net answer from everybody is you have to really listen to the management commentary. Increasingly, P&Ls, which were designed probably 15 years ago when public sector banks started listing on the BSE, are now completely inadequate to understand. We do need something more. The press release is simply not helping. We have to get to the presentation and check out what the slippages are, what are the slippages from the watch list itself. Last time the slippages from the watch list were about 5,000 crore, 4,900 crore?
4,560.
Okay, 4,560 crore. So we have to check whether a great deal of that has, turned to NPL. There is only 5,000 crore of extra NPL that they have declared. So it's extremely difficult to say whether there was a higher degree of write-offs, higher degree of upgradations, recoveries, and therefore this adjusted number is looking smaller. It's quite possible that the slippages are higher, but they got adjusted because they have a higher number of upgradations or write-offs. So we really are not in a position to say. Prakash Diwan, last thoughts?
So, Lata, the way the numbers, especially, from the stress asset part, the slicing of that particular thing as we wait commentary is, my belief is it's going to make Axis look now it's going to make Axis look better than ICICI. Because ICICI is probably not, coming up with any kind of a trigger that shows that there is a topping out of bad loans. There's a improvement in credit growth.
Well, let us wait for the press conference.
So
I think
that's my thing, because of the way the numbers look presently. I'm just the conjecture, of course, is based only on that. And
the P&L, I would just give them benefit of doubt because their NPLs, net NPLs have not gone up much. Only the gross NPLs have gone up. So it looks like they've recognized a goodish bit. Provided for a goodish bit.
A major lumpy set of accounts because they had cushion on the top line to provide for in terms of IPRU stake sale. That is what
everybody is waiting to hear.
That is what the feeling is coming from the P&L.
I take your point, but we will have to wait for more color from the company itself. Okay, there are some statements coming from Chanda Kochar. Retail portfolio now constitutes nearly 50%. So they are de-risking their book away from corporate and large lending. Maybe in the years to come it will not be as bad, but we will really have to wait and see. At the moment, it is only a qualified plus or a thumbs up for the ICICI Bank result. It appears that the NPL number has been moderated, probably because of upgrades and probably write-offs. Also, a very good amount of provisioning probably has been done, which is why the net NPLs is only at 3.5%, although the gross NPLs have gone up to 6.9% nearly.
Very quickly, just to read out some more statements that our correspondent Ritu Singh has been sending. Chanda Kochar has also said that exposure to power, iron and steel and other stressed sectors has reduced from 13.3 in March to 11.9%. Now, they expect a significant further reduction in the stress portfolio over the next few months. Additional provisioning has been made in this quarter for about 3,588 crore rupees, and that's about 1,515 crore of floating provisions. Largely retail portfolio, as you said, constitute 49.7% of total loans and grew at 21% and focus on lending to better client rates in corporate sector.
I don't think that's adding much to our, I think it's more a repeat of what we have already got in the press release. I think the presentation will give us a better idea. Okay.
Okay, so Cognizant numbers are out. While we wait for ICICI Bank's press conference, remember that is expected any minute now. Cognizant's revenue has come in at $3.45 billion versus $3.37 billion. So what we were expecting was roughly anywhere between 3.43 to 45. So this looks like it is in line with expectations. We'll try to get all the other numbers. The guidance will be very crucial. Remember, last quarter they had cut the guidance for the second time. Okay, the guidance for the fourth quarter has come in. For Q4, the revenue is expected to be in the range of about 3. We just pull that up for you. We have
3.45 to 3.51, which means for Q4 at the lower end, they're expecting no growth, absolutely, and at 3.51, which is the upper end, it should be a growth of close to about 1.7, 1.8%. So the Q4 guidance, prima facie, we're just going by the first two, just 2 decimal points, but it looks like a 0 to 1.7% guidance for Q4. For Q3, the company delivered $3.45 billion, which is a growth of roughly about 2.4% seen on a quarter-on-quarter basis. This is within the company's guided band of 1.8 to 3%. So their Q3 guidance given by the company was 1.8 to 3%. Compared to that, the company's delivered 2.4% for Q3, which means in line. Their Q4 guidance has come in at about 0 to 1.7%, and that, I guess, would be on expected lines because Q4 is generally a very soft quarter. Now what we're awaiting is what the full year growth number.
So we have the full year growth number. So for the full year, that is the calendar year 2016, they are expecting revenue to be in the range of 13.47 billion to 13.53 billion. Now, remember, they had cut this down. So they have essentially maintained what they had said.
No, they have lowered. They have lowered the upper end. So their earlier guidance was $13.47 billion to $13.6 billion. Now you're saying at the upper end, the company is guiding for $13.53 billion.
Yes.
So this would be, the upper end getting cut. I'm just trying to calculate what the new guidance would be at the upper end, but it should be a growth of, I think, 9%. So it looks like 8.5 to 9% guidance has further come down to 8.5 to 9%. So the upper end of the company's guidance seems to have come down for calendar year 2016, and I think that's not going to go down, very well.
Yeah.
So, the two key problems, the key problem that Cognizant is facing, they're the, healthcare and BFSI, which together contributes 70% to the company's revenues, are facing macro headwinds. This has been clearly articulated by the company for the last 2 quarters at least. So it's 70% of your revenues which is facing macro headwinds, and that's the reason why repeatedly we're seeing Cognizant's numbers, guidance getting cut forward. We're going by we're averaging and we're approximating a lot of numbers. We only are going by 2 decimal digits, but Q3 seems in line with expectation. Q4 guidance is soft, but the disappointment is that the company seems to have lowered the upper end of their guided band. But let's try getting in some reactions. We've got Ravi Menon of Elara Capital joining in. Ravi, so far what we have, how are you reading Cognizant numbers and your key takeaways?
So I think that, the revenue is probably a slight bit of a surprise, but considering the GBP depreciation that's happened this quarter. And I think that, the guidance cut too is probably mostly due to the GBP depreciation. So don't really see this as very disappointing.
Okay. Karan, are you disappointed by another guidance cut by Cognizant?
Yeah, it's another guidance cut, but it's largely because of the currency impact which is there. So I don't think on a constant currency basis there will be much of a revision.
Okay. What does this tell you for what the coming quarters are going to look like for Cognizant? Because it's still going to be a single-digit growth here for Cognizant, and clearly it was Cognizant which was with the bellwether of growth, compared to the other IT majors.
So growth has been lowering for the Indian IT vendors also, and this has been in line basically to see, and the